Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 4th of February 2016 and we're looking at the reasons why the Bank of England voted 9-0 against raising UK interest rates today. Last month we announced that the Bank of England voted 8-1 against raising interest rates from its current 0.5%. And the reasons for doing so. Well, today it voted 9-0 to maintain the current rate, and here are the reasons given literally only an hour or so ago. The bank highlighted that the recent sharp sell-off in global stock markets and investors' jitters about a slowdown in China caused even Ian McCafferty, one of the 9 members of the Bank of England's Monetary Policy Committee, to drop his vote for a rate rise. He had voted against the 8 other members of the MPC since last August, but this month agreed with his colleagues that it was too soon to raise interest rates from 0.5%, where they have been for almost 7 years. The Bank of England has warned that the UK economy is weaker than 3 months ago, but still expects interest rates to rise and not fall. Wage growth has been weaker than the MPC had been expecting, and minutes to its latest policy meeting suggested it was cautious about predicting any significant pickup in pay over coming months. The turmoil on financial markets, a sharp fall in oil prices, and gloomier prospects for growth in many of the world's largest economies, including China, have caused investors to predict that any interest rate rise will either not occur in 2016 or will only do so not until the last quarter. The bank's quarterly forecast for inflation and growth published alongside the latest decision also noted that wage growth had been weaker than expected, and so headline inflation was recovering more slowly than anticipated. So, the MPC has forecasted that GDP growth this year will be 2.2% as opposed to the 2.5% previously predicted. And 2017 growth figures have been cut from 2.7% to 2.4%. Inflation is now forecast at 0.4% in the first quarter of this year, down from the 0.7% originally forecast. This means that the 2% inflation target is far from being reached, even with interest rates standing at their current levels. Quote, "The scale of the recent commodity price falls mean that CPI inflation is likely to remain below 1% until the end of the year," unquote, the inflation report said. The bank also highlighted a gloomier outlook for the global economy, which supported the Chancellor's warning last month that 2016 had begun, quote, "with a dangerous cocktail of risks from the global economy," unquote. The effect of this announcement and a weaker dollar over the past 2 days has caused gold to rise in sterling terms today by 1.5% and in dollar terms by 2%. And silver has also risen by 2.5% in sterling terms and 3.2% in dollar terms, with gold standing at $1,153 and silver at $14.88. As we mentioned in our weekly update last Saturday, that if silver prices should break the 1460 resistance level, then we can expect to see silver migrate to the $15 level, which is exactly what is currently occurring. We hope you have found this video interesting and informative, And if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/Illuminati Silver. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.